Okay, let's unpack this Tesla. It's a name that, well, it instantly brings to mind innovation, disruption, and often, let's be honest, a whole lot of headlines. You send us a stack of sources diving deep into their second quarter 2025 performance and what's potentially next for the company.
Yeah, and what's fascinating here is that while some headlines might paint a pretty grim picture of the recent financials, the sources also lay out this really complex landscape. You've got challenges, sure, but also some incredibly ambitious future strategies.
Right.
So our mission today really is to cut through the noise, understand the critical numbers, explore the why behind them, and also dig into the ambitious what's next from the company itself.
Absolutely. So you'll come away not just with the numbers, but hopefully with a clearer understanding of the forces shaping Tesla's immediate future and its long-term vision, giving you that well-informed edge without drowning in all the data. So let's start with the hard facts. The second quarter of 2025. What did the numbers actually tell us about Tesla's performance? What jumped out?
Well, the Q2 results certainly laid out some stark realities. Revenue came in at $22.5 billion. Now, that's a 12% drop year over year.
12%. That's considerable.
It is. And the sources are quite clear. This marks Tesla's largest quarterly revenue decline in well over a decade.
Wow. Yeah.
Then you look at net income, GAAP basis, somewhere between $1.17 billion and $1.2 billion. That's a 16% decrease compared to the previous year.
Okay, so profits down too.
And maybe the most direct hit, vehicle deliveries. A really significant drop to about 384,000 units. That's down 13.5% from over 440,000 in the same quarter last year.
Right. Fewer cars delivered, less revenue coming in from the core business.
Exactly. The automotive business revenue specifically declined by 16%, and overall operating income, that decreased substantially by 42%.
42%. Ouch.
Yeah. And their operating margins stood at 17.2%, which is down 1 percentage point.
Yeah.
But I think this raises an important question, right? Beyond these direct sales and profit figures, what else in the financial structure points to shifts in Tesla's business?
And here's where it gets really interesting, I thought. The sources point to this growing reliance on something called regulatory credits for a big chunk of their operating profit.
That's a critical point. It turns out nearly half of Tesla's operating income for the quarter was actually dependent on these regulatory credits.
Half.
Almost half. These come from carbon emission trading, essentially.
Yeah.
But the value they received, $439 million, was less than half of what they got the previous year.
Okay, so even that source is shrinking.
And here's the real kicker. The sources note that due to changes in U.S. tax law, most of the $7,500 consumer tax credits and these carbon credits, they're expected to basically disappear starting this fall.
So a major prop under their operating income is about to be kicked away.
That seems to be the concern highlighted, yeah.
Yeah.
It's not looking like a sustainable long-term profit driver.
And how did the market react to all this, the stock price?
Well, after the announcement, the stock saw about a 1 to 5% drop in after-hours trading. And that's compounding an already significant year-to-date decline of over 18%. So analysts, investors, they're clearly concerned. You see persistent worries about these regulatory changes, the price cuts they've been making, and, just intensified competition.
Okay, so the numbers paint a pretty clear picture of challenge. But the why is always the sweet spot in these deep dives. Our sources outline several key factors contributing to this decline.
Indeed. It's not just one thing. The primary reason cited across the board is a significant slowdown in EV demand, particularly in big markets like the U.S. and Europe.
Right, we've heard about that. Higher interest rates making loans pricier.
Exactly. High interest rates, fewer government incentives maybe for buying EVs, and just this general economic uncertainty that seems to be dampening new car sales overall.
Makes sense.
And then on top of that, you've got fierce competition, especially from Chinese manufacturers like BYD, launching this waves of lower-cost EVs.
And Tesla's response has often been price cuts.
Right. They've cut prices, probably aiming to keep market share. But the sources are clear, that's severely impacted their profit margins, squeezing them.
Now, there's another factor mentioned, and it's a bit more sensitive. The sources seem to highlight a link between brand image and sales.
Yes, this is an area the sources definitely address. They state pretty clearly that the CEO's public political activities, specifically mentioning support for certain political figures and open support for far-right parties, have led to some consumer backlash.
Okay. And how did that manifest? according to the reports.
Well, it talks about brand boycott movements in some parts of Europe and the U.S., directly impacting sales there. The sources also mentioned a decrease in consumer interest, again in the U.S., and also China, apparently following some public conflicts the CEO had related to the previous U.S. administration back in May.
So it's presented as a tangible factor affecting sales, not just noise.
According to these sources, yes. And it adds to the picture. Beyond just fewer sales, this decrease in the core automotive revenue, plus the reliance on those fading regulatory credits, it points towards maybe a fundamental weakening of the company's profitability and competitive strength in its main business right now.
Okay. So despite these headwinds, Tesla is famous for its ambitious, almost sci-fi-like long-term vision. What's their game plan for turning things around? The sources highlight a couple of major strategies.
That's right. They're not just sitting back.
Yeah.
A really crucial element for trying to recover market share is the planned launch of a new, more affordable EV.
The Model 2 or whatever it ends up being called.
Exactly, whatever the name. Small-scale test production apparently began in June. Mass production is scheduled for the second half of 2025. Some sources even pinpoint Q4 2025.
So potentially just over a year away.
Potentially. And the success of that vehicle is widely seen as, maybe, the key variable for Tesla's immediate future, getting back into growth mode.
That makes sense. A lower price point could definitely attract a wider audience, especially with competition heating up. But this is where Tesla really tries to differentiate itself, looking beyond just selling cars. Let's talk about the big bets they're making.
Absolutely. This is the long game. First up, robotaxi and full self-driving, FSD, and AI in general.
Right, the autonomy focus.
Yeah. An initial small-scale robotaxi service has actually started in Austin, Texas. It's limited right now, invited users, specific areas like downtown South Congress. They recently increased the fare, interestingly, from $4.20 to $6.90.
Okay, testing the waters and expansion.
Plans seem aggressive.
Yeah.
Within Austin in weeks, supposedly. And then other cities like the San Francisco Bay Area, Nevada, Florida. The stated goal is pretty wild. Cover half the U.S. population with robotaxi service by the end of 2025.
Half the U.S. population by end of next year.
Yeah.
That sounds ambitious, pending regulatory approval, I assume.
Oh, absolutely. That's the huge caveat. Regulatory approval is key.
Yeah.
But you have Elon Musk quoted saying autonomy is the story and that it will amplify value to astronomical levels.
Strong words. And the tech itself, FSD.
Mileage is growing rapidly. Reached 4.5 billion miles driven with FSD supervised. They're expecting unsupervised FSD, so truly driverless in certain conditions in some cities by the end of this year.
This year. Wow.
That's the target. And there's a new FSD version coming for their newer hardware 4 cars, apparently with 10 times more parameters. The idea being it should be much, much more capable.
So are people actually buying into this, the FSD subscriptions?
Well, the CFO noted an increase in FSD purchases recently.
Yeah.
And FSD usage apparently jumped 25% after their latest big software update, V12. But it's also noted that nearly half of eligible Tesla owners have never even tried FSD.
Interesting. So there's still convincing to do, even among owners.
Seems like it. The long-term vision includes private owners letting their cars join the robotaxi network when they aren't using them. Probably next year, the sources suggest, after unsupervised FSD is confirmed and they figure out some kind of verification process, maybe like Airbnb.
Renting out your self-driving car?
Yeah. And then there's the cybercab concept, a dedicated robotaxi vehicle aiming for under 30 cents per mile operating cost. Mass production planned for 2026.
Okay, that's a huge vision just for transportation.
Yeah.
But it doesn't stop there, right?
Right.
Optimus, the humanoid robot.
Right. Optimus. Version 3 is described as a pretty sophisticated design now. A prototype is expected by the end of this year.
Another end-of-year target.
Yep. With mass production starting in 2026, Musk's projections are around 100,000 Optimus robots per year within 5 years. And they're already using some, apparently, in Tesla's Palo Alto offices and even the Tesla diner.
Seeing them in action. Okay, so self-driving cars, walking robots. It's clear AI is absolutely central to all of this. What are the reports saying about the computing power they're building to make this happen?
Huge investment there. They've added 16,000 NVIDIA H100 GPUs to their Cortex's supercomputer cluster in the Texas Gigafactory. That brings the total to around 67,000 H100 equivalents.
That's a lot of computing power.
It is. And R&D spending reflects that, up rapidly to nearly $1.6 billion. Then there's Dojo 2, their own custom AI training supercomputer, expected to be largely operational in 2026, and they claim it'll be equivalent to 100,000 H100 GPUs.
Building their own massive AI brains.
Essentially. And looking even further ahead, the upcoming AI 5 chip, or Hardware 5, is described as a potential game changer, their next-gen custom AI chip. So powerful, the reports mention, its performance might need to be restricted for export outside the U.S.
Well, okay. When's that expected?
Mass production target is late 2026 or early 2027. So still a ways off, but part of that long-term AI roadmap.
It really sounds like they're building this comprehensive AI ecosystem. Beyond these massive AI and robotics bets, what other areas are the reports highlighting? Any other segments growing?
Yeah, the energy storage and service divisions, they continue to grow steadily, helping to offset some of the drop in the car business.
So megapacks and power walls, that kind of thing?
Exactly. Though some analyses do note potential negative impacts from uh, the federal Build Back Better bill, often called the OBB bill, on energy storage and solar incentives. So some policy headwinds there too, perhaps.
Okay. Anything else on the horizon?
Also on the manufacturing side, they're planning to start U.S. production at lithium refining and cathode production facilities in 2025, bringing more of the battery supply chain in-house.
Vertical integration continues?
Seems so. And development of the semi-truck is ongoing, with mass production for that also expected in 2026. Lots of targets for 2026.
So putting it all together,
Yeah,
how are investors actually viewing these incredibly ambitious plans, especially against the backdrop of the current financial struggles? It's quite a contrast.
it really is. And that continuous decline in net income now for 3 quarters in a row has definitely raised concerns. Worries about prolonged underperformance, increased stock price volatility.
Understandable.
Analysts and investors keep voicing these persistent worries about the regulatory changes we talked about, the ongoing price competition, maintaining market share in the near term.
And you mentioned something interesting, a feeling of fatigue.
Yeah, one interesting detail from some investor commentary sections in the reports is this sentiment of kind of fatigue among some long-term investors,
Yeah.
mainly because so many key developments are repeatedly mentioned as happening next year.
The jam tomorrow problem.
Sort of, yeah.
Yeah.
It speaks to maybe patience being tested while waiting for these big bets to pay off.
So what's the big picture takeaway from the company's leadership regarding these long-term bets? Are they acknowledging the short-term pain but doubling down on the future?
Very much doubling down. The CEO continues to strongly emphasize this long-term transition,
Yeah.
moving towards an AI and robotic-centric business structure,
Shifting the company's identity almost.
fundamentally. He also sees his controversial stock compensation package as crucial for this, wanting enough control, he says, to steer the company in this direction, but framed as not being immune to accountability either. So while the short-term uncertainty is definitely high, the potential for recovery and improved profitability, according to the company narrative, is fundamentally tied to actually implementing these innovations and generating revenue from them. The core story for Tesla, as leadership paints it, really remains its autonomous capabilities and AI.
We've certainly journeyed today, from a deep dive into some challenging quarterly results all the way to this landscape just filled with ambitious technological leaps. Robotaxis scaling, humanoid robots potentially becoming reality, these cutting-edge AI chips trying to redefine computing.
Yeah, and if you connect this to the bigger picture, it does raise a really important question, I think. In a world where traditional car sales might be slowing, how quickly can a company fundamentally transform its core identity? Pivot from being primarily a vehicle manufacturer to potentially a dominant player in AI and robotics?
And what does that even mean for how we define companies anymore? Is it a tech company, an automaker, something entirely new?
Exactly. What does it mean for those traditional definitions?
It's a fascinating pivot to watch, that's for sure. And it leaves you to ponder, perhaps, what other industries might be on the cusp of a similar radical redefinition of their core business. Something to think about. Well, that's it for this deep dive. We hope you feel well informed and ready to explore even more. Until next time.